Continued strong dollar poses risks to the rest of the world, without a doubt, Paul, especially emerging Asia. But do you think it's a very different setup now when you consider the work that the likes of India and Indonesia, who were once seen as the Fragile Five, have been doing to really raise the economy and move it to the next level?
Yeah, I think that's a fair point, right? So we don't want to automatically go back to the last time we had a strong dollar around and talk about the usual round of risks. We can, of course, do that. But the two countries you just mentioned, Indonesia and India, both have great growth stories, good domestic demand stories. So I would argue that they're more insulated than before to what goes on in the rest of the world. Of course, if they have dollar liabilities and local currency assets, a strong dollar is going to be a risk. But I would say for those strong domestically driven economies, it's less of a risk than it would be otherwise.
And how confident are you in terms of a meaningful recovery in China's economy in the second quarter, possibly beyond, or is it going to take longer?
Right. We think it's going to take longer. We just came out of the two sessions, as you guys know, and the policy response seems to be relatively calibrated. The problem is centered on the real estate sector, and that has a couple of linkages. One is it's the main asset on household balance sheets, so it has a dampening effect on household confidence, and also it's a source of local government revenue, and it's probably between a quarter and a third of GDP. The authorities seem to be going for the extend and pretend model, wanting market discipline to work, but also wanting to make sure that the sector doesn't totally collapse. But we don't see bold policy actions, so we're pretty confident of our 4.5% growth track for this year. That's a multi-year crisis. That's not going to be resolved in the next couple of quarters.